LiteFinance, the world of financial freedom.
Hello, it's Monday, October 17th. It's time to start the market forecast. And this week is about inflation data from a couple key economies from Europe and other parts of the world as well. So there will be what to talk about. First, let's start with the macro calendar. And so we begin with Monday and already good news from Japan industrial production, which rose from 2.7% to 3.4%. Later in the evening, we will get first a CPI reading, which will be from New Zealand, where consensus shows it will ease compared to the previous quarter. Next, on Tuesday, we will get US industrial production, and for Tuesday, that's about it. On Wednesday should be the most interesting day. We will get a CPI readings from the UK, Eurozone, and Canada, and along with the crude oil inventories and beige book from the US. Thursday will bring us initial jobless claims, Philadelphia Fed Manufacturing Index, and EU Leaders Summit will start, which will last 2 days. On Friday, we will get a national CPI reading from Japan and retail sales from the UK and Canada. Now, let's talk about the weekly fundamentals for the US dollar, which will help you trade along the way with currency pairs that include the greenback. So, the US dollar is so strong that the only way to weaken it is a coordinated FX intervention. However, it is not that simple. During the pandemic, central banks and governments acted in the same team, but now, on the eve of another recession, they seem to move independently. This leads to turmoil in financial markets and strengthens the position of the US dollar as the main safe haven asset. Without a coordinated plan, other currencies will be falling versus the dollar. Jeremy Hunt, appointed as the new UK Treasury Chief, has now said taxation will rise and public spending will shrink, despite Britain's growing cost of living crisis, because the fiscal stimulus policy fails. His speech supported the pound and other European currencies. The calls for Liz Truss to step down as Prime Minister add to political uncertainty, but it's more important for investors that fiscal and monetary policies be balanced. So the UK economy is about to slide down into a recession. 47% of 452 MLIV polls respondents believe that it is the UK that will be the first to face a recession in the economy. 45% suggest the euro area, and only 7% is that the US will fall into recession first. And so at the same time, Wall Street Journal expects raise the probability of a recession in the United States in the next 12 months from 49% in July to 63%. So this is the highest figure since the summer of 2020. And so the specialists believe that the recession will come already in the first or second quarter, although they previously predicted that from January to March and from April to June, US GDP would expand by 0.8% and by 1%. And so the experts believe the Fed will raise the federal funds rate to 4.267% in December and to a peak of 4.551% in June. So 30% of economists suggest that the interest rate will be cut in the fourth quarter of 2023, and 28.3% expect it in the first quarter of 2024. Analysts' forecasts are less aggressive than those of the derivatives market and the Fed. Furthermore, Liz Truss' government refused the mini-budget, and St. Louis Fed President James Bullard says the US dollar will be the weakening once the Fed monetary tightening reaches its peak. So the above factors allowed the Euro-USD to consolidate above the important support of 0.97. Of course, the factor of contradiction in the policy of the government and the Bank of England has been priced in the GBP quotes, and traders are exiting shorts hoping that the situation will improve. Nonetheless, the fundamental reasons for Euro-USD downtrend have not changed. So the strength of the US economy, high demand for safe haven assets, and interest rates press down the pair. Moreover, the USA is unwilling to take part in the FX interventions. Joe Biden does not believe the greenback is to blame for the global economy troubles. Rather, anemic GDP growth in individual countries and contradictions in politics. He calls Liz Truss's plan to cut taxes a mistake. The Fed's primary task is to press down inflation, and the USD will be riding up until the policy changes. And so summing up all the things, it is still relevant to sell the Euro-USD on the rise or on the breakout of the support at 0.97. And so that is all for today. Thank you guys for watching and goodbye.